Today we are going to talk about why invest in global markets. Before I start, let me just ask you one question. Where have you invested your monies? I don't know, but I have a very good estimate of where you would have invested it. There are four asset classes you would have invested it. Number one, real estate. Number two, gold and silver. Number three, fixed deposits, bonds. And number four, mutual funds and equities. This is a very good example of diversification because what it really does, it makes your portfolio very resilient. In case there is a shock in the stock markets, the rest of the portfolio does not suffer. If there's a shock in the real estate market, your other investments are safe. This is why you spread your wealth across different asset classes. In fact, our grandmothers told us all the time, don't put all eggs in the same basket. This is a living example of how we put eggs in different baskets. The same thing holds true when we go beyond India's borders. Reason number two, the first one was diversification. The second one, reason number two, is this. Let us look at what are the top 10 businesses in India in the public markets and what are the top 10 businesses in the US in the public markets. When we compare them, what do we see? We see two, three things. Number one, we see that Indian markets, the companies are good, the Indian market is doing very well, but the businesses are businesses of today. What do we see there? Banks, telecom companies, pharmaceuticals, construction companies. They are great companies. They are efficiency driven. They are giving good returns, but they are not innovative. They are not building businesses of the future. Secondly, they are all focused on selling to Indian consumer market. The customer base is largely, if not entirely, in India. They don't sell to the world, right? And if you look at their market caps, it is relatively small. The total market cap of the Indian stock markets is about 5 to 5.5 trillion dollars. Now let's look at what do we see in the US public markets. What are the top 10 companies? What are their characteristics? What we see here is that they are businesses of tomorrow. They are driven by innovation. Secondly, they serve the world. Coca-Cola sells to almost every country on earth. So does Netflix, Nike, Google, Amazon, and so on. Microsoft serves almost 80% of all computers across the world, which makes them very resilient to local political or economic shocks. Then look at the size. Almost all the top 10 companies are more than $1 trillion each. And if you look at the total market cap of the US, it is about $55 trillion, which is 10 to 11 times of India's stock markets. I would ask you now, why would you ignore such a profitable and large market? So the question is, why should you not invest in those markets? How should you go about it? We have a separate session on how should you go about it, what holds you back, and how you can make good investment there, how do you select there, and make fantastic returns. Let's talk about returns, which is the third reason. Over the last 10 years, Nifty 50, the index, has given a return of about 13%. Now let's look at Nasdaq 100. Over the last same 10 years, Nasdaq 100 has given about 17 to 18%. And these are both compounded annually figures. Then you add the power of the rising, appreciating dollar against the rupee. Now you compare the two. Essentially, it would mean that in the US, if you had invested 100 in India and 100 in the US, whatever that 100 is, the 100 in US would have doubled as compared to the 100 in India. So in a sense, in the US, you double your money in half the time. If you are interested in finding out more about global investing and how to go about it and how to make investments in the US through a very well thought out structured portfolio approach, please reach out to us and we'll be able to and we'll be happy to help you.